Well, good afternoon, everybody. I'm Dave Weisberger, CEO of CoinRoutes. It's time for This Week in Crypto. It's Friday, November 4th, just a few days before the midterm elections, and we'll see what that does. This week, however, was Fed Week, and while people might say there was a lot of action in the crypto market, when we look back 1 week, it's one of those things where you say, what really happened? Bitcoin is basically flat to up 1% over the week. Ether's had a pretty strong rally. It's up about 4%. At the same time, in the traditional land, the Russell is down about 2%. Nasdaq is down around 5%. Although both had nice rallies into the close today. The reality is we're seeing a little bit of decoupling this week. If it continues, it might actually be something. But right now, it's more like small orange shoots, as it were, or green shoots, if you use a more colloquial aphorism. The fact is, we're still range bound. We're 22,000 and change is still the top of the Bitcoin range. Ether is getting toward the top of its range. Technicians are starting to get excited over 1,600. We'll see if 2,000 is in play, etc. But the reality is, in a rising rate environment, what we're really looking for is more distrust in institutions, more belief in the future of the technology, because both are dramatically undervalued compared to their potential, but their potential is not necessarily being judged at the probability that it should be. I will continue to say that I think both are incredibly strong asymmetric bets to the upside, but will still trade like risk assets. If we see a big sell-off in NASDAQ, small cap stocks, etc., I would expect to see the crypto rally fail. On the other hand, if it meanders, I could see crypto rallying because it does, in fact, have a lot of characteristics where this macro environment is positive for. There's also some news this week, and it's interesting that the today's rally, which probably was mostly due to the Fidelity news we're going to talk about in a second, did trigger some liquidations, but mostly on Ether. By way of comparison, last week when there was a big rally during the week, there were some pretty serious liquidations. My notes: $600 million of shorts got liquidated one day, $700+ million worth of shorts got liquidated the next, and that, or actually is in reverse, but 1.3 billion in liquidations in a 2-day period is quite a bit for recent history, specifically considering the lack of relative volatility. Today, there was about $180 million in liquidations, which, while not trivial, is still above trend, is still relatively small. So we'll see. These moves have not been particularly large. But let's talk about the news. And there are a few things to talk about this week. I'd say 3 that matter. One is the Fidelity news. They're going to offer Bitcoin and Ethereum to their 401k participants. Now, the good about this is Fidelity is the largest 401k provider. So we're talking about a significant amount of money eligible to flow into spot Bitcoin and spot Ethereum through Fidelity Digital. I would say the bad about this is the way it's been represented in the press. It's troubling to me as the CEO of a company dedicated to providing best execution, because the headlines say that Fidelity is offering commission-free trading, and that's true. But they also say, it's not in the fine print, I don't think they're hiding it, but it's very clear that there is an implied 1% bid-offer spread when these coins are being bought for you through Fidelity Digital. Now, 1% in Bitcoin is over $200 per coin. That may not sound like a lot to people who pay 1.4% in order to buy via Coinbase, but the truth of the matter is it's a lot. To put this in perspective, at CoinRoutes, our clients trading order sizes of well over $100,000 a trade, my clients are paying net of the fees to Coinbase, to whatever exchanges they're using, and to CoinRoutes, are paying somewhere less than 3 basis points to buy or sell Bitcoin and less than 4 basis points to buy or sell Ether. Those numbers are 0.03 and 0.04%. So literally, we're talking about well less than 20 or 30 times the cost of what it would cost to be 1/30th or 1/20th of the cost that it is to trade in the retail platform. That is still ridiculously high. And I would expect that retail, while they will trade, those costs are going to prohibit large sale trading and adoption of the assets. I think that will happen when price competition really gets going. But we will see. The meta point here is there's still a long way to go in providing best X, And so we at CoinRoutes have a lot to do, and so do our competitors who are trying to bring this to the market. The other couple quick piece of news that was interesting is Apex Digital being bought by Bakkt. And it's for a reasonable amount of money, and it's pretty clear that it's for client acquisition, showing that there's still significant interest to acquire clients in the crypto world. I think that it's very much in keeping with the narrative that the market has really bottomed here and is looking to a slow, steady uptrend. I'm not saying it's happening anytime soon, but it wouldn't surprise me if these are the sorts of things you start to see toward the end of a bear market and not the beginning. Last, and also very important, is there's been a fight recently over some regulation that's being debated. FTX is on one side, and a lot of the DeFi people are on the other side, and they're talking about a particular bill without getting into the minutia. What's interesting about this is the bill itself defines nothing about what is a digital commodity versus what is a digital security, and then tries to say, well, how these things will be regulated. I think that's exactly backwards. I think the Loomis Gillibrand approach is far better. Define what is under the jurisdiction of what would be the SEC, what is under the jurisdiction of the CFTC, and then work with the industry to create rules that actually fit to digital securities and fit digital commodities. I quipped this morning that trying to do it in the opposite order is more or less like building a house and then pouring the foundation after you've already built the house. Probably not the best idea, but the fact of the matter is, with luck, if we end up with a Congress that is amenable to bipartisan legislation, perhaps in the next 2 years we can get to some form of regulatory clarity. We all know my belief, I've said it many times. I am hoping for gridlock. I'm hoping for a Republican House to be able to grill Mr. Gensler and hold his feet to the fire, and for it to make and repudiate the very control-oriented Democrats that are in both bodies of the legislature. Because really, crypto is about economic freedom. And what we want to see are rules that will allow investors to participate with some level of safety and assurance that they're not being subject to fraud, but also to make sure that people provide the information that they really should provide, and to provide backdrops to projects that are trying to solve this, like Masari and Ryan Selkis has been very loud on this issue, although not as much recently as he said in a tweet today. In any case, I think that that's enough for today. We'll see what happens next week, and so by the next time we talk, we should know what the political environment will be facing for the next 2 years, and hopefully that will dictate a little bit more certainty in terms of the way forward. Until then, stay safe, have a great weekend.